Welcome to the Sector Spin with Terry. In this video series, I share with you what I'm watching each week in the various sector industry subgroups. It's time to sort through all of the S&P industry groups again and look for those with improving trends. Now, I last did this with you in April, in case you want to go back and review that video. Back then, I reviewed the following industry subgroups, which were seen with northeasterly vectors, meaning that they had rising momentum and relative strength trends. This group included the industrial and office or real estate groups, the defense index, waste disposal and services, gas distribution, healthcare providers, and home improvement retailers. Now here is where these industry groups were positioned in the weekly RRG back in April when I recommended them to you. This table on the left shows the 3-month price appreciation change along with the 3-month return of the benchmark S&P. As you can see, industrial and office REITs index led these groups higher with almost a 13% return compared to the S&P's 6.3% return over the same time period. Defense and waste disposal also outperformed the benchmark, but gas distribution, healthcare providers, and home improvement retailers underperformed, and with home improvement retailers actually showing about a 1% loss. Now, as I animate this weekly RRG and move it towards today, watch these groups as they move over into the leading quadrant. You'll also see the headings of these vectors rotate back to the south, and this is where investor momentum starts to wane. Usually during these periods you see sideways to lower consolidation moves in the price of the instruments. However, all of these groups still remain in this leading quadrant, which means despite some loss of momentum, they are all still positioned with higher relative strength than the benchmark S&P, and they are considered to be the leading industry groups. Now, for those groups that have been basing sideways and that are still in this quadrant, we should look for their price to catch up to their moving average and look for some strong support levels where these groups can re-accelerate to the upside. Look here once again at the industrial and office REITs group. It is now showing a new northeasterly heading for the past 2 weeks. I'm going to open a price chart for this group, and you can see back last April this is where this group was rising strongly, but it went through a period of consolidation. But let me show you here. This is the consolidation period, okay, that occurred, that little period from May 3rd to May 12th. And then a new uptrend was formed. Well, we have been continuing to push higher. We've set a new resistance level here at about 134 as of June 11th. And now we have a new period of consolidation occurring. Now these consolidation periods are not anything to be scared about. Everything, the market's not going to move in a straight line forever. So these little periods of consolidation allow the price to play catch up here with the moving averages. And in this case, you can see here, we did dip below the 20-day moving average, but still held well above the 50-day moving average. Price caught back up, recaptured that within a week or so, and then continued to push higher. So I expect we're going to have another similar array of consolidation move that could take us back down to this this uptrend, this lower uptrend support channel that I have drawn here. So there could be some more sideways. Now this correction could play out in a more of a sideways triangle. Since this was more directional, this one actually, using the guideline of alternation, this one might actually work in our favor, and we may find some good support. We just need to watch this real close here. Now let's take a look at the stocks inside this leading industry group. Many of the former leaders actually pushed down here into this weakening quadrant But most recently, they have reformed northeasterly vectors in a hook formation. Let me animate this for you. Let me take you back here to about the same time period where we were first looking, where we first got interested in this industry group. Now, at that time in late April, we had already established quite a few stocks in this particular industry group with relative strength, maybe about, a little bit more than a third, almost a half of the stocks that are listed here had a relative strength greater than 100, which meant that they were outperforming the benchmark. And nearly all of them had a momentum higher than 100 here. Now I'm going to animate this until today. And you can watch these leaders, this group of leaders right here. These are the ones that pushed down here into the weakening quadrant over that same time frame. So that consolidation occurred. But now that consolidation is complete, now look what's happening. This is the beginning of the hook formation that returns these guys back into leadership position. So not only did these primary set of leaders reverse and are now pointed, and some of them indeed Boston Properties pushing itself already back into the leading quadrant, you also had at the same time this secondary group of these stocks that were in this improving quadrant. Now you have the secondary group that has collectively also pushed itself over into the leading quadrant. Furthermore, look at the secondary group of leaders. Many of these are still showing signs of increasing momentum and relative strength. The northeasterly vectors are pushing higher in this. I urge each of you to take these ideas to the next level using your own trade planning strategy. If you followed my recommendations back in April, I'd love to hear from you in the comment section below on how you did with your trades. As always, plan your trade and trade your plan. Please check us out at tradinganalysis.com for more great market analysis and a great member community where you can get more trade ideas and also share yours with our active community. Thanks again for your time and attention.